say you know get issues with building it. You not start building. If you not start building, you know they will.
Wetin you dey build? What is it actually? You are telling me you trust God. Which I'll slap your mouth there. Wetin you dey build? Do I know him? Abi na no dey come. What is it build? I trust thank God for
Just to
finances.
handle the bad thing.
Yes no. Shebi na me still go meet apostle for another person. Apostle tell me say I need to have assurance that I'll be taken care of. Hello. Mm, let me know when you have joined though. Now you see I'm gonna waste my time.
But if that person had told that person before, they go tell you say you need to be sharing with people.
That's a problem.
So this one, if you communicate, say you're quiet,
I'm
I
not
thought
going
that
anywhere. Okay. Can you hear me? Can you use the chat box? Can you hear me? Can you hear me? Can you hear me? Can you hear me? Before I proceed, I want to be sure if you can hear me before I proceed. Let me know if you can hear me. That is what I want. I don't want to start talking to myself. Okay, okay, all right. So the last time network interrupted us, so we could not continue. We could not have our class actually. So I'm going to be starting from where I was the last time. And like you said, you have done the please before I continue, um anything you want to say, you drop it here on YouTube. Don't go and drop it on WhatsApp. If I've left WhatsApp. So if you drop it on WhatsApp, I will not see it. Okay. So drop it here on YouTube with the chat button. I will attend to you. So if I am saying anything that you do not understand, you can call me back and I will explain. Okay, I will explain to you. Okay, so let me share my screen now so that you will see. you'll see what I'm doing. Okay. Okay, so just let me know if you can see my screen. Let me know if you can see my screen. My screen is, just let me know, just let me know. If it's not showing, then I have to start sharing it again. Am I playing this? Let me know if you can see my screen. If I don't get your response, there's no way I will continue because it's just the both of us here. I need to know that. I need to be sure that you're following me. Can you see my screen? Oh, please, are you here? Are you here? Please. Oh, oh. And please, so that we have a seamless communication, I need your like, I need you to be responding to me like very like fast, so that we just do this quickly. We have a lot to cover, so I just need your quick response so I won't get to be waiting. So I'll be starting with the basics of technical analysis, and since we're starting with the basics, I will be um doing. I'll start with market trends. I'll start with market trends, and under market trend, we are going to be seeing the uptrend. We're going to be seeing the downtrend. We're going to be seeing the ranging market, and we are going to be seeing the Shopee market. Shopee market. Okay, so these are what um we will be looking at for today. The uptrend. Sorry, I'm coming. I just want to So the uptrend is a type of market that it just goes up continuously. Like the market just keeps going up and up and up and up. That is what is called an uptrend. So I don't like speaking too much grammar when I'm teaching. I just want a situation whereby people will understand what I am teaching, because if I want to explain the uptrend professionally, it'll be like an uptrend is a market that makes a series of higher highs and higher lows. But sometimes people get confused when you say stuff like that. So I'll just say an uptrend is a market that just keeps going up. So I believe by now you know what is called the bulls and the bears. You know what is called bearish and bullish. So in an uptrend, we say that the bulls are in charge of the market. You know that the bulls are in for a buy. So when the market keeps buying continually, that means when the market keeps going up continually, you say that the market is in an uptrend. So in an uptrend, what you see is something like this: market goes up, comes down a little, which is called a pullback. It goes up again, comes down a little, which is called a pullback, goes up again, and it just keeps going up. So this is what an uptrend looks like. So I know you may be wondering, why is a pullback? Why is there a pullback? A pullback actually gives you an opportunity to join the market. So in case you could not see the beginning of the uptrend here, you can actually join the trend here to enter a buy. You can join the trend here to enter another buy, and you can join the trend here to enter another buy. So these are the purposes of an uptrend. Now, prices or the market do not just go up straight, like the market does not go straight up like this. It's not possible for the market to go straight up like this. There must be areas of pullbacks. Okay, in a situation the market just goes up straight up like that, it's called it happens mostly in fundamentals. When there's fundamentals, like the CPI news, the NFP news, and all of those stuff, they are, can push the market once, but immediately the fundamentals are over, you may see areas of pullbacks. So pullbacks must happen in every market. Okay, pullbacks must happen in every market. So in an uptrend, what you do is to buy. In an uptrend, what you do is to place a buy order. That's just what you do in an uptrend. So I'm going to be showing you examples of some uptrends, so that you see what I'm talking about. Okay, for instance, we have this uptrend here from this whole place. This is an uptrend. So when the market is on an uptrend, what you do is to buy. Just place a buy order. Let me circle that for it to be clearer. So we have this, like, this is an uptrend here. So you see that the market just went up continuously. This is an uptrend here. So let me check for another. And to me, this is not, the market was just dancing around here. But however, this is an uptrend. Let me go to a higher time frame so that we see it from a bigger view. You see it from a bigger view. Okay, so you see that the uptrend started here. This is November. That's last month, 19th of last month, or 20th. An uptrend started, and you can see that its prices, let me use my brush right now. So prices actually went up, it came down like a pullback, it went up again, came down, giving the pullback, went up, did what we called a consolidation. This thing you are seeing here is a consolidation, did a consolidation and went up. Now it's just dancing around this place. Okay, so in this kind of market, what you do is to place a buy order. You just enter a buy and you continue buying till the market gets to a support or a resistance. It will interest you to know that a support or a resistance is such that you do not, how do I put it, I'll explain support or resistance. But support or resistance are areas of reversals. Support and resistance are areas of reversals in the market. So this is an uptrend. Let me look for another example. Please, why am I always doing safe? God, this is a bad habit. So oh Jesus, nice. Wow. In this is another example. I just wanted to give another example of an uptrend. So this is an example of an uptrend. Market keeps going up and up. It is I think it is go to a higher time frame. A resistance was broken there. I believe so. Yep. Look at it. Resistance was broken and meant an uptrend from, as far as I can remember. From the bigger time frame, this has been an uptrend. Wow. April, sorry. It started from April and the market has been going up continuously. And it's now, this is December now. So for the past, let's say April, May, June, July, August, September, October, November, December. For the past 8 months, this pair AUD USD has been on an uptrend. It has been on an uptrend. So this is an uptrend per se. Okay. So the next thing we'll be looking at is a downtrend. The next thing we'll be looking at is a downtrend. Do you understand the uptrend? Please and please call me back. I have to explain. Understand. So, do you understand this? Should I explain again? Should I explain again? I need to be getting a response as fast as possible. I need your response sharply. Alright, I will assume that you understand. I will go to the next if I do not get your response. But I don't like it when I'm teaching and people do not understand what I'm teaching. Victory, are you here? Um, I will assume that you are getting what I'm saying, and I'll just go to the next thing I have to say. Okay. So let me just go to the next. So the next thing that I'll be talking, what you want to understand is that in trading, it's opposite. If you have an uptrend, you have a downtrend. If you have a bullish, you have a bearish. So it's always like opposite. That is how trading works. It's either the market is buying or selling, or it's consolidating, fine. But it's majorly either a buy or a sell. So the downtrend, sorry, is sorry, the downtrend is the opposite of the uptrend. That is simply it. The downtrend is opposite of an uptrend. So whereas the an uptrend is giving a series of higher highs and higher lows, the downtrend is giving a series of lower highs and lower lows. So what you'll be seeing is that the price is keeps going down. Let's say, let me use dollar now. Let's say from $10 to $8 to $6 to $4 to $2, just like that. So the price just keeps coming down. So what you do in an uptrend, in a downtrend, is to sell. So this is actually where people get confused. They think that forex is same as crypto. Like crypto, crypto, you just buy a coin at, let's say, $10. When it gets to $20, you sell off. But then in forex, you can make money both ways. You can either make money when the market is selling or when the market is buying. When the market is in a downtrend, you can make money. When the market is an uptrend, you can still make money. So that is the difference between crypto and forex. So there is a part of crypto that was introduced for this, but just understand this. In a downtrend, the market gives a series of lower highs and lower lows. So what people majorly say is that in a downtrend, the bears now are in charge of the market. Remember that in an uptrend, the bulls are in charge of the market, but in a downtrend, the bears are in charge of the market. They're the ones that are pushing the market downwards. So what you just do is to align yourself with what the bulls are doing. Simple. What the bears are doing. Simple. You don't have to trade against the market. You don't have to say, "Oh, I want to buy." If the market is selling, you don't have to say it's buy, I want to buy. Then you place a buy order. Your stop loss will be hit and nobody send you understand. So what you want to do is to place sell orders when the market is selling. So this is an example of a downtrend here. I just spotted one, and it was actually a beautiful downtrend kind of. Okay, so this is it here. It downtrend like this. So this downtrend started September 2024 and it ended in February 2025. So imagine just taking a sell here and allowing it to come down straight down. And this would have been, let me calculate the pips here. Although most people do not wait for this, they just when they see few profit, they just go off. This is like let's say 700 pips. 700 piece that is like, let's say, is it $7, $7,000? No, $70. Yeah, that's 7,000 for a standard lot size. You get. So if the trader would have aired, but I know most trader wouldn't have aired, maybe a little pullback and they will exit the market, come back, and all of those stuff. This is a downtrend I drew here. Does a pullback, continues down, does a pullback. Although this is more like a very perfect range in market though, but so look at what I cycled just now. This downtrend was so cool and nice. This downtrend was so cool and nice. So this is a downtrend too. Okay, so do you understand the downtrend? Place a buy when the market is selling, and do not place a sell when the market is buying. You just have to go in line with what the market is doing. Now, a reversal comes in when market hits a support. So for instance, we see this downtrend that has been here. This one that I cycled now. You see that the market was selling and selling until it got to this support and it started buying. So it became an uptrend like this. So I think we are seeing the uptrend because the market has not gotten to this stop. Market has not gotten to this stop. But then this is a reversal happens when the market hits either a support or a resistance. The market will not buy forever. Also, the market will not sell forever. There will always be areas of corrections, of reversals especially. There will always be reversals in the market. So the market must reverse. So when the market reverse, you realign yourself to what the market reversed to. So if the market was in an uptrend and it reversed to a downtrend, you realign yourself to the downtrend. If the market was in a downtrend and it reverses to an uptrend, what you do is to realign yourself to the uptrend. I hope that is clear. I hope it's clear what I just said. It's clear. So the next thing we will be looking at is the ranging market. The next thing we'll be looking at is the ranging market. So the ranging market is such that it's a market that gives equal highs and lows. Equal highs and lows. So I'm going to draw that now. A ranging market is something like this. Equal highs, equal low. So it is neither an uptrend uptrend, not a downtrend. But I'll say it is both an uptrend and a downtrend in between a range. That is what a ranging market is. So for this kind of market, what you do is to buy and sell. I will explain is to buy and to sell. So let's say the market is at this support as is here, the sell order. If it comes to the support again, you place a buy. Comes to the resistance, you place a sell. So this is how you trade a ranging market until it breaks below the range, or it breaks above the range, because honestly nobody can really predict where the market is going to break to. What we do is to just trade. We ride the range until it is broken. Now let me tell you, a ranging market has 9 market when I see one. Why? Because I know exactly when to enter the market and I know exactly when to exit the market. You understand? So for instance, if I enter a buy here, I know for sure that when the market, I'll take information, I'll take a sell and write it down to this place and exit. When it gives a bullish confirmation, I'll take another buy. In a ranging market, sometimes in 2 days, you can make more profit than a trending market. A trending market is the uptrend and downtrend. Ranging market is this we are talking about. It is mostly called a rectangle pattern. You know how a rectangle is, what you are seeing now. This is a rectangle. Sometimes it can manifest as a triangle pattern. So it can manifest like this. Let's say like this sometimes, and it goes in the range like this. It just goes like this and like this and like this. You understand? So this is also a ranging market. Can manifest in triangle format, it can manifest in rectangle format, it can also manifest as something like this, like flat here and down like this. So you see something like this. They are all ranging markets. They are all ranging markets until the trend is exhausted. Then you just exit it and see what will happen. Aside that, you just trade, just write the range. Okay, so let's see some examples of the ranging market. Let me just go through my chart. One discipline you need to have as a trader is the ability to go through your chart and pick out what the market is doing. If you cannot do that, you will not profit from the market. Okay, thank God I've seen this one. This is a perfect range. Let me go to Italy. Don't know what's happening to my voice though. I have to manage it like this. So um okay, I have to expand it. So this is an example of a ranging market. I knew about it late. So I think I knew about it when it was almost exhausting. And I just had to take the little I could take from it. You understand? So you see that when the market was at this support, it went up. So the resistance area came down. You take a buy, it went up to the resistance again, take a sell, came down. When it came down, you take a buy. So this was where I caught the range. I didn't catch it on time. So we take a range up, and when it was time for it to sell, I took it down again. So it didn't get to this place and it still went up, and this was where the range was broken and it broke above it. You get. So this first one was 200 pips. The second one was um this was like 50 pips. How strange. 50 is, it's not correlating though. Then the next one was 300. Before the range was broken upwards. So this is how a ranging market is. What you do in a ranging market is to buy and sell. Buy and sell. You buy when it gets to a support and you sell when it gets to a resistance. That is what you do in a ranging market. It's as simple as that. Okay. The next thing we'll look at is the shopping market. The shopping market is a market that does not have a direction. It's directionless. The prices are tightly squeezed. So you see something like this. This is a shopping market. What you do in a shopping market is to stay away from your chat. You do not trade a shopping market as your hands will get, not that your hands will get burnt. You'll be frustrated, really, because the market will not be. I think this sale has started though. Can you hear me? I'm back now.
Okay. Okay.
Please let me know if you can hear me. I'm back
Okay.
for people watching. Later. My they turn me. Can you hear me? Can you hear me? Please let me know. Okay, okay. So let's continue. Sorry, my network just logged me out. Sorry, and I know it's hard work. Okay, so but my voice is still getting. Hmm?
But we try one speak out. We are training the voice.
Um, so we were looking at a shopping market, and I've I've explained what a shopping market is. That is a tightly squeezed market where there's no direction. So market is just going back and forth. So this market is going back and forth. You do not have to trade it. My voice is getting very bad.
Really?
I beg, please.
Why don't talk to me like this?
Thank you. My voice is getting bad. Uh,
First, that means so.
Let me delete this first. So I want to just take water so at least it will be better. Okay. Um. Market so that we see what it looks like. So this is what a shopping market looks like. Market is just going back and forth, just like that, without any clear direction. Without any clear direction. So that is a shopping market.
So your camera no there.
Okay. So this is a shopping market. You get. Hope we understand ranging market. That is ranging market, uptrend, downtrend, and the shopping market. So I'm going to be giving you an assignment. Your assignment is to send me two charts each, two on uptrend, two on downtrend, two on ranging market, and two on shopping market. Okay, you have to like indicate it. You cycle it. The way I do cycle my own, you have to cycle it like that. Also, just cycle it and send it a screenshot for me. So that is your assignment for this session. The next we'll be looking at is the support and the resistance. The next we'll be looking at is the support and the resistance. That is our next target, our next focus. So we will be looking at that. So let me, what is support? What is a support? A support is a place below where the market is, from which, let me say that, is a place below where, so I have to take that again. I just got distracted. I thought I saw someone's comment. I was trying to look at it. Support is a below where the market is. I'm just trying to make it as simple as possible. From which prices buys from. That's for which the market buys from. That is support. A support is a place below price or below where the market is, from which the prices starts to buy from. That is what a support is. Why the resistance is a place above, so you need to catch that, above where the market is, from which prices sells from. Okay, so that is it. Support and resistance. From this support, prices buy from there. So what you do is to buy. From the resistance, prices sells from there. That is what you do is to sell. So let me use my brush again. So a support is something like this. Maybe the market was selling initially, and all of a sudden it reverses and starts buying. So the place it reverses from, this is called a support. So this right here that you are seeing is a support. This is where the market started buying from. That is a support. Why a resistance is, maybe the market was going up before, and all of a sudden it just starts selling. So the place where it starts selling from, that is a resistance. Where the market starts buying from is a support. Where the market starts selling from, it's a resistance. Is this clear? Is this clear before I continue? Oh, is this clear? Oh, okay. So let's look at some examples. I'm trying to go through my share to see good examples of support and resistance. I think I can work with this one. Let me go to a lower time frame. Okay, I will cap the assignment to your DM. Don't worry. I will cap it in your DM. And so I don't understand what's going on here. Um, I'm looking for a very good example so that you understand it clearly. That's why I'm doing all this. That's why I've not said anything. Let me go to another page. Mhm. So this is a support. Market was selling. Uh, Market was just selling. When it got here, it reversed up. So this is a valid support of which you have seen my mark on it already. I use my horizontal line to mark support and resistance. I use my horizontal line to mark support and resistance. So this is a support that I've marked here because I believe that when market gets here again in the future, it's going to respect it, of which it did. If can see this place, so this support actually happened. Let me delete all this stuff so that you get it clearly. So my chart is plain now. You can see it. Let me mark a support, and the very first support here, this is what I'm going to be marking. Let me mark the very first support here. I use horizontal line to mark support and resistance. So this is the very first support, and I'm placing my horizontal line here, of which I've done. I'm going to go to lower time frame and see how the market reacted to this support. I'm I'm going to be seeing how the market reacted to this support. You see, it's still marked, so it doesn't change. So this is the support I marked earlier, and that support actually happened in, let's say, that would be 1990 something. No, let me go to the higher time frame that I marked it from. Okay, so this very first support happened in 1977. Strange, right? But then the markets kept respecting it. So it was respected again in 2011. You can see that when the market came here, it went up again. See, in 2016, the same support was respected. You see how powerful support and resistance are. There cannot be like there are, how will I put it? Anytime you see them, just place a line there, knowing that okay. So this is how powerful support and resistance can be. This is how powerful support and resistance can be. So you don't want to do that. So I want to look for examples of resistance. If you want my examples of support, I will be very, very, let me look for more examples though. Let me go to another pair. I'll go to another pair and we'll see some other examples of support and resistance. As usual, if you want to mark major support and resistance, you go to major zones. I'm looking for mm, what I'm seeing here is what I call a diagonal support or a diagonal resistance. um if I want to mark this, I use a trend line because it's not really flat, it's something like this. That's why I call it diagonal support and resistance. It's actually something like this. See that it's not flat like the other ones, it's just slant. So when a support or a resistance is slant, I call it diagonal support or a resistance. It's not a straight one. Okay, so this is what happened. I can extend this though. You just take the eyes of the candles and connect them together to do this. That is how we do it. You take the eyes of the candles and connect it together. So it's by expectation that when the market gets to this top again, it's going to drop down. Because why? This is a confirmed resistance that is here. This is a confirmed resistance that is here. I don't know why I'm finding it difficult to look for normal support and resistance. That is horizontal support and resistance. Oh, perfect. I've seen one. Okay, let's go to a higher time frame. So this was actually a resistance that occurred here. This resistance occurred in this zone. It occurred in 1985. However, in 1994, it respected it. Fast forward till now, this it respected it again in 2020. So you can see how powerful support and resistance is. Now I've given you a sheet code. Anytime you see a support or resistance, just place an horizontal line there. So even though you forget, if the market comes back again to that place, you will remember that something happened there. You just by seeing that line alone, I will just know that something happened there. Even though I've forgotten, I'll go to a higher time frame and see what happened there. I'll know that okay, this is a support or this is a resistance, and I'll be careful around that particular zone. Okay, so this is how to mark your support and your resistance. It's really nothing serious or nothing magical about it. Let me go to another time frame and see. Let me go to another time frame we have done. This one is an a mini support and resistance that the market has respected so well. So you can see this market is actually a ranging market though. So you see support here, market went up, it got to the resistance, it came down, got to a support, it went up again, got to the resistance. So this is a support and resistance that a lot of persons understand. So it's just dancing around support and resistance. So it's at the support again. If it breaks below the support, then it's certain that it's coming down. But if it respects the support, that means the trend is still intact. You understand? So this is an horizontal support and resistance. Is everything clear? Are we good? This is an horizontal support and resistance. This here is this here. Okay. I believe this is one that is on a higher time frame. Let's expand my chart. Mm-hmm. Okay. Please, if you have any question, let me know so I'll take them. They will be the last thing we are doing for today. We have done market trends. We have seen uptrend, downtrend, ranging market, and shopping market. We have seen support and resistance. So I don't want to like rush everything once and we start getting confused. Okay, so I'm going to stop here today. Then I believe we can continue tomorrow. Please let me get your feedback. If we can continue tomorrow, let me get your feedback, please, so that we'll continue tomorrow. We do our candlestick patterns tomorrow if we can, if you have chance. Let me get your feedback from that. So for this one, okay, pips, PIPS. I thought you have gone through the basics class. Pips is PIPS. That is percentage in points. So it can either be in profit or loss. So sometimes you can. I know you're in the group. You can see when I said this doll did 20 pips, this did 30 pips, this did 70 pips. So we can either lose 10 pips, we can lose 20 pips, We can make 20 pips, we can make 10 pips, we can make 70 pips. So it's just a measurement. The way you have a measurement, like which time will I use now? Pips is just a measurement. Let's say do you have a basket of rice? Fine. One bag of rice, two bag of rice. So it's just a measurement in prices. What we made or lose is called percentage in price, percentage in print. That is it, PIPS. So the percentage it can never be in profit or loss. So that's why you hear me say that we have made 20 pips, we have made 50 pips. So it's just a measurement of what we have made or lost. Do you understand that? Mm. Let me know if you get that. So I'm adding to your assignment. The first assignment is that you give me two charts each on uptrend, two charts on uptrend, two charts on downtrend, two charts on ranging market, two charts on shopping market. You're giving me another two on support, you give me another two on resistance. How long how long does each market stay? It is not, there is no time frame or there is no timing of each market until it gets to a support or a resistance. That is how long it stays. I think that's the better way to use it. So once it gets to a support or a resistance, start selling. Okay, if it is in a downtrend, when it gets to a support it starts buying. So that is how long it stays. So there's nothing like it stays for 5 days or it stays for 5 hours. Like we saw a downtrend that stayed for 4 months. We saw another one that stayed for just 2 weeks. You understand? So there is no particular gauge of whenever a market stays. So until it gets to a support or a resistance, that market is still valid. So there is no gauge or timeline, sorry, that the market stays. Okay. Do you have any other question? Do you have any other question? You do not have any other, okay, no other questions for now. Okay. So will tomorrow be okay for you? Let me know if tomorrow is fine by you. Will tomorrow be fine by you? But tomorrow will not be 8. So if we are doing tomorrow, we should start by 5:30 p.m. Not 8. If we are doing tomorrow 8 is too far, please. 8 is too far. If we are doing tomorrow, we can do 5:30. I don't know if 5:30 is fair enough for you. 8:30 p.m. is late, please. Please, 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 please. 8:30. I'll see how that will work if it will be possible. If it won't be possible, please I'm not saying I possible to be now, but let's see how it goes. Okay. Okay, fine, perfect. Five. Thank you. Thank you. That five is okay with me. We can do five between 5 and 5:30. We can start latest 5:30, then we just go on. Okay. So think that'll be all for this night. That'll be all for this night. So we see tomorrow by 5. Let's say 5:30, please. We see tomorrow by 5:30. Good night from here. You can go off the stream. Good night.
No people will stay.